On January 23, 2025, President Trump signed an executive order establishing a strategic Bitcoin reserve. The media celebrated it. Pro-crypto policy, American innovation, leadership in digital assets. Finally, a government that understands Bitcoin. The price spiked. Crypto Twitter went crazy. Everyone called it bullish. Everyone except the people who actually read the order. Because if you read the language, if you study the legal framework, if you understand what strategic reserves actually mean in government policy, you realize this isn't what they're telling you. This isn't pro-crypto. This is the setup for something else entirely. Something that happened before. In 1933, when the government used almost identical language to confiscate gold from American citizens, revalue it, and erase 40% of the national debt overnight. They called that one a strategic national asset, too. They said it was essential to economic stability, too. They gave the Treasury authority to acquire and hold, too. And then they made it illegal to own gold for 41 years. Executive Order 6102, the greatest wealth confiscation in American history. Exposed only after it was too late for anyone to do anything about it. The United States government owes $37 trillion. That debt cannot be paid through taxes, cannot be paid through spending cuts, cannot be paid through economic growth. The math doesn't work. There's only one way to eliminate unpayable debt: devaluation, strategic, calculated, invisible theft of purchasing power from everyone holding dollars. And the mechanism they're using is Bitcoin. Trump's executive order isn't about innovation. It's about creating the legal framework to confiscate your Bitcoin, revalue it at 10 times the price they paid you, and erase trillions in debt using your wealth. This is the 4-stage playbook. Stage 1, create legal authority. Stage 2, accumulate quietly. Stage 3, mandatory sale at below market price. Stage 4, revalue after confiscation. Stage 1 is complete. Trump signed it in January. Stage 2 is active right now. The government is accumulating Bitcoin through seizures, fines, and silent purchases. Stage 3 is coming. Based on the debt crisis timeline, mandatory Bitcoin sales to the Treasury will begin in 2026 or 2027, and Stage 4 follows immediately. After confiscation, the government revalues Bitcoin to $1 million per coin, creates trillions in balance sheet assets, and erases the debt. I'm going to show you exactly how this works. The line-by-line language in Trump's executive order that sets it up. The 1933 gold confiscation that proves this exact playbook has been executed before. The 4-stage pattern governments follow when they confiscate assets to eliminate debt. And most importantly, the timeline for when Stage 3 begins and what you must do before it's too late. Because once mandatory sale orders go out, your Bitcoin is gone. And you'll watch the government revalue it to $1 million while you hold worthless dollars. Let me start with 1933 because this is the blueprint. The exact playbook Trump's executive order is following. Word for word, structure for structure. In 1933, the United States was drowning in debt. The Great Depression had collapsed the economy. Unemployment was 25%. Banks were failing by the thousands. Deflation was destroying everything. And the government owed more debt than it could pay. The debt-to-GDP ratio had climbed to 40% and was accelerating toward 50%. For context, that was considered catastrophic at the time. President Franklin Roosevelt needed a solution, not economic growth. That would take decades, not spending cuts. Politically impossible during a depression, not higher taxes. You can't tax broke people. He needed to eliminate the debt quickly, quietly, and legally. So he confiscated gold and revalued it. Here's how it worked. At the time, the United States was on the gold standard. The dollar was defined as 1/20th of an ounce of gold. 1 ounce of gold equaled 20.67. This had been the price since 1879. For 54 years, gold was 20.67 per ounce. Your dollar was literally a claim on physical gold held by the government. You could walk into a bank, hand them a $20 bill, and receive 1 ounce of gold. The system worked because gold backed the dollar. Trust was absolute. But Roosevelt saw an opportunity. If the government owned all the gold, they could change the price. And changing the price would revalue their assets and devalue the debt simultaneously. So on April 5th, 1933, Roosevelt signed Executive Order 6102. The order had 3 key provisions. First, it declared gold a strategic national asset essential to economic stability. Sound familiar? Second, it gave the Treasury authority to acquire and hold gold on behalf of the United States. Third, it required all American citizens, partnerships, associations, and corporations to deliver all gold coin, gold bullion, and gold certificates to the Federal Reserve by May 1st, 1933. 26 days. The order made exceptions for small amounts. You could keep $100 in gold coins, about 5 ounces, enough for jewelry or collectibles, but anything more was illegal. If you didn't turn in your gold, you faced 10 years in federal prison and a $10,000 fine. In 1933, $10,000 was a fortune, the equivalent of $200,000 today. The penalty was designed to ensure compliance, and it worked. Most Americans turned in their gold. They had no choice. The government knew who had it. Banks reported large gold holdings. Safe deposit box records were examined. Compliance was enforced. Between April and May 1933, American citizens delivered approximately 300 million ounces of gold to the Federal Reserve. The government paid them $20.67 per ounce, the official price, fair market value under the gold standard. Then, on January 30th, 1934, 9 months after confiscation, Roosevelt signed the Gold Reserve Act. This act did two things. First, it transferred all gold from the Federal Reserve to the U.S. Treasury. The government now owned it directly. Second, it reset the official gold price from $20.67 to $35 per ounce, a 69% increase, overnight. Here's what that did to the government's balance sheet. Before revaluation, the government held approximately 300 million ounces of gold worth $6.2 billion at $20.67 per ounce. After revaluation, that same gold was worth $10.5 billion at $35 per ounce. The government created $4.3 billion in value out of thin air just by changing the accounting price. But here's the key. The debt didn't change in nominal terms. The government still owed the same number of dollars, but those dollars were now worth less relative to gold. Before revaluation, $1 could buy 1.20th ounce of gold. After revaluation, $1 could only buy 1/35th ounce of gold. The dollar lost 43% of its value against gold. And because everything was priced relative to gold, the dollar lost purchasing power across the board. This is how the government erased the debt. The debt was denominated in dollars. They devalued the dollars by 43%, so the real value of the debt fell by 43%. The government's debt to GDP ratio dropped from 40% to 25% within 5 years, not by paying the debt, by devaluing the currency it was denominated in. They stole purchasing power from every American holding dollars and transferred it to themselves in the form of reduced debt burden. And the Americans who turned in their gold, they received $20.67 per ounce. They watched the government immediately revalue it to $35. They lost 43% of their wealth. And they couldn't buy gold again because it was illegal. The government made gold ownership a federal crime. You couldn't own more than $100 in gold coins until 1974, 41 years. Anyone who held gold through the confiscation, who refused to comply, who hid their gold, saw it go from $20.67 to $35 to $100 by the 1970s to $850 by 1980. They multiplied their wealth 40-fold while those who complied lost everything. This is the playbook. Confiscate at the official low price, revalue at the higher price, erase debt through devaluation, legal, constitutional, precedented. And it's happening again right now with Bitcoin. Let me show you Trump's executive order line by line because the parallels are exact. The order is titled, Strengthening American Leadership in Digital Financial Technology. Compare that to Executive Order 6102, titled, Forbidding the Hoarding of Gold Coin, Gold Bullion, and Gold Certificates. Different asset, same structure. Both frame the asset as strategic. Both position government control as necessary for economic stability. Section 1 of Trump's order establishes policy. It states that the United States government will position itself as a leader in digital asset markets. It declares that digital assets are vital to American economic security. It establishes that the federal government will acquire, hold, and manage digital assets as strategic reserves. Read that again. The federal government will acquire digital assets as strategic reserves, not encourage private ownership, not create a favorable regulatory environment. Acquire. That means take possession. And strategic reserve means government ownership, not yours. Section 2 grants authority. It directs the Treasury Department to develop frameworks for digital asset acquisition. It authorizes the Treasury to hold Bitcoin and other digital assets on behalf of the United States. It directs the creation of custody solutions, valuation methodologies, and accounting standards for government-held digital assets. Now, this is infrastructure. They're building the machinery to hold massive amounts of Bitcoin at government scale. Custody solutions means government-controlled wallets. Valuation methodologies means official prices, separate from market prices. Just like gold in 1933 had an official price of $20.67 that the government could change at will. Accounting standards means how they'll report and revalue these assets on the balance sheet. Section 3 addresses acquisition methods. This is the critical section. The order authorizes acquisition through seizure from criminal enterprises, acceptance as payment for fines, penalties, and settlements, and purchase through market operations or strategic transactions. Seizure they're already doing. The government holds approximately 210,000 Bitcoin seized from Silk Road, Bitfinex, and other criminal cases. Acceptance as payment is new. This means crypto companies that violate regulations can pay fines in Bitcoin, and the government keeps it for the strategic reserve. Purchase through strategic transactions means buying. But notice what the order doesn't say. It doesn't set limits. It doesn't cap the amount they can acquire. It doesn't define what strategic means. This is intentional vagueness that allows unlimited acquisition. Now compare this to Executive Order 6102. That order declared gold a strategic asset. Check. Granted the Treasury authority to acquire and hold gold? Check. Required delivery to federal institutions. Trump's order doesn't require delivery yet, but the legal framework exists to add that provision later through regulation or subsequent executive action. The pattern is identical. The difference is timing. In 1933, Roosevelt went straight to confiscation because the system was already broken and he needed to act immediately. In 2025, Trump is building the infrastructure first. Stage 1, create legal authority. Stage 2, accumulate quietly. Stage 3, mandatory sale. Stage 4, revalue. The playbook is the same, it's just being executed more gradually because the crisis hasn't peaked yet. So let's define the 4-stage pattern clearly, because this is how government asset confiscation works. Stage 1, legal framework. The government creates the legal authority to acquire, hold, and value the asset. They declare it strategic. They grant agencies the power to take possession. They establish that government ownership is necessary for national security or economic stability. This stage happens quietly. Most people don't notice because it's just bureaucratic language in an executive order or legislation. Trump's executive order completed Stage 1 on January 23, 2025. The legal framework exists. The Treasury has authority. The strategic reserve designation is established. Stage 1 is done. Stage 2, quiet accumulation. The government begins acquiring the asset before announcing their intentions publicly. They use mechanisms that don't spike the market price, seizures, fines, strategic purchases through intermediaries, over-the-counter deals that don't appear on exchanges. The goal is to accumulate as much as possible at low prices before the public realizes what's happening. The US government currently holds 210,000 Bitcoin. That's about $21 billion at current prices. But the target, according to Senator Cynthia Lummis's Bitcoin Act, is 1 million Bitcoin. That's $100 billion at today's prices. They need to acquire another 790,000 Bitcoin without spiking the market. So they're doing it quietly. Seizures are accelerating. Every major crypto crime results in government acquisition. Bitfinex hack, 120,000 Bitcoin seized. Silk Road, 69,000 Bitcoin seized. Every ransomware case, every exchange that violates regulations, the government is taking Bitcoin and adding it to the reserve. Fines paid in Bitcoin are new. Companies like Binance, Coinbase, Kraken, when they settle regulatory violations, they can now pay in Bitcoin. The government keeps it. Strategic purchases are happening through proxies. The Treasury isn't publicly buying Bitcoin on Coinbase. They're using intermediaries, OTC desks, and private transactions that don't show up in market data. Stage 2 is active right now. The accumulation is happening. And it will continue through 2025 and into 2026 until they reach the target or until the crisis forces Stage 3. Stage 3, mandatory sale. This is the confiscation stage. A crisis occurs, debt ceiling, dollar collapse, banking crisis, major economic emergency. The government declares that the crisis requires extraordinary measures. They announce that for national security and economic stability, all Bitcoin holdings above a certain threshold must be sold to the U.S. Treasury at the official price within a specified time frame. The official price will be below market price. If Bitcoin is trading at $200,000, the official price might be $100,000. If Bitcoin is trading at $300,000, the official price might be $150,000. The government pays you half of what your Bitcoin is worth on the open market, but you have no choice. Compliance is mandatory. Penalties for non-compliance will be severe, just like 1933, 10 years in federal prison, massive fines, asset forfeiture, criminal prosecution. The government knows what you own. Every exchange requires KYC. Know your customer. Coinbase, Kraken, Gemini, Binance, they all report to the IRS. They know your identity. They know your holdings. They know your wallet addresses. When Stage 3 begins, you'll receive a letter. You have 30 days to sell your Bitcoin to the Treasury at the official price. If you don't, you're committing a federal crime. Most people will comply. Just like 1933, the penalty is too severe. The government has your information, and they'll make examples of a few high-profile cases to scare everyone else into compliance. Stage 3 will happen fast, 30 to 90 days from announcement to deadline. The government will collect millions of Bitcoin from American citizens at below market prices. Stage 4, revaluation. After collecting the Bitcoin through mandatory sale, the government revalues it. They announce that for purposes of the U.S. balance sheet, Bitcoin will be valued not at the price they paid you, but at a much higher official price. Let's say they collect 1 million Bitcoin through Stage 3 mandatory sales. They pay an average of $120,000 per Bitcoin. That's $120 billion in acquisition cost. Then they revalue Bitcoin to $1 million per coin for balance sheet purposes. Suddenly, the government holds $1 trillion in Bitcoin reserves. They created $880 billion in value out of thin air just by changing the accounting price, just like gold in 1934. But it's not just accounting. When the US government, the largest Bitcoin holder in the world, declares Bitcoin is worth $1 million for strategic reserve purposes, the market follows. Not immediately to $1 million, but Bitcoin reprices upward dramatically. $200,000 becomes $400,000, becomes $700,000 over 12 to 18 months. Close enough to the official valuation that the government's math works. And as Bitcoin rises 5x to 10x from where it was during Stage 3 confiscation, the dollar collapses. Because the revaluation of Bitcoin upward is the devaluation of the dollar downward. They're the same event. When Bitcoin goes from $100,000 to $1 million, that's not Bitcoin gaining value. That's the dollar losing 90% of its value. Food prices multiply by 5. Energy prices multiply by 5. Housing costs explode. Everything denominated in dollars becomes worth 90% less in real terms, including government debt. The government owes $37 trillion nominally. But after the dollar collapses 90% in real value, that debt is only worth $3.7 trillion in real terms. They erased $33 trillion in debt burden through Bitcoin revaluation and dollar devaluation. And you, the person who sold your Bitcoin at $120,000 during stage 3, you watch it get revalued to $1 million, but you can't benefit. You're stuck holding devalued dollars. The government stole your Bitcoin for half price, revalued it to 10x, and used it to erase debt. You were robbed legally. That's the 4-stage pattern. Legal framework: quiet accumulation, mandatory sale, revaluation. And the United States is in stage 2 right now. Now let me show you exactly where we are and what's coming. Stage 1 is complete. Trump signed the executive order January 23, 2025. The legal authority exists, the strategic reserve designation is established, the Treasury has acquisition powers, the valuation methodology framework is in place. Done. Stage 2 is active. The government holds 210,000 Bitcoin right now. They're accumulating toward the 1 million Bitcoin target. Senator Loomis introduced the Bitcoin Act in July 2024. The bill proposes acquiring 1 million Bitcoin over 5 years and holding it for at least 20 years. This is the official legislative framework. It hasn't passed yet, but Trump's executive order doesn't need congressional approval. He's acting through executive authority. The accumulation is happening quietly. Every criminal case involving crypto results in more Bitcoin going to the Treasury. Every regulatory settlement now includes the option to pay fines in Bitcoin. And strategic purchases are happening through intermediaries that don't report to public exchanges. The government is building toward 1 million Bitcoin at prices below $150,000, while the market is distracted by bullish narratives. Stage 2 will continue through 2025 and possibly into early 2026. The government wants to accumulate as much Bitcoin as possible before stage 3 because once they announce mandatory sales, the window closes. They want maximum holdings at minimum prices. Then they revalue. Stage 3 is coming. The trigger will be a crisis. It always is. The government needs justification for extraordinary measures. In 1933, it was the Great Depression and banking collapse. In 2025, 2026, it will likely be one of 3 triggers. First, debt ceiling crisis. The U.S. government hit the debt ceiling again in January 2025. The Treasury is using extraordinary measures to avoid default. But those measures run out by summer 2025. If Congress doesn't raise the ceiling, the government faces default or shutdown. This creates the emergency justification for mandatory Bitcoin sales to raise funds and stabilize the balance sheet. Second, banking crisis. Commercial real estate defaults are accelerating. Regional banks are failing. This was previewed in 2023 with Silicon Valley Bank, Signature Bank, and First Republic. More failures are coming in 2025 to 2026 as $1.5 trillion in commercial real estate loans mature and can't be refinanced. When multiple banks fail simultaneously, the government declares a financial emergency and implements mandatory Bitcoin sales as part of the stabilization package. Third, dollar crisis. Foreign holders of U.S. treasuries are selling. China, Japan, and others are reducing dollar reserves. If this accelerates into a dollar dump, the government needs to stabilize the currency. They announced that the dollar will be backed by Bitcoin and gold reserves. But first, they need to confiscate Bitcoin from citizens to build the reserve. Mandatory sale under emergency powers. Any of these 3 triggers leads to stage 3. Based on current timelines, the debt ceiling crisis could trigger as early as summer 2025. When stage 3 is announced, it will happen fast. The government will give 30 to 90 days for compliance. You'll receive notice through registered mail. You must sell your Bitcoin to the U.S. Treasury at the official price by the deadline. The official price will be 40% to 60% below market value. Stage 4 follows immediately. Within weeks or months of collecting Bitcoin through mandatory sales, the government announces the revaluation. Bitcoin is now valued at $1 million per coin for U.S. strategic reserve purposes. The government's balance sheet explodes. They hold $1 trillion in Bitcoin assets acquired for $120 billion. They created $880 billion in value. They use this to offset debt, stabilize the dollar narrative, and erase trillions in real debt burden through the inflation that follows. You, the person who sold at $120,000, watch Bitcoin go to $400,000, then $700,000, then approach $1 million over the next 12 to 24 months. You can't participate. Your Bitcoin is gone. You hold devalued dollars that buy 70% less than they did before. The government wins. You lose. This is the timeline. Stage 1 complete, Stage 2 active, Stage 3 coming 2025, 2027, Stage 4 immediately after. The pattern is in motion. Let me be absolutely clear about what this means for you. If you hold Bitcoin on an exchange, Coinbase, Kraken, Gemini, Binance, the government knows. They have your name. They have your holdings. They know your wallet addresses. When Stage 3 begins, compliance is not optional. They will send you a letter. You will comply or you will be prosecuted. Your Bitcoin will be confiscated at below market price. If you hold Bitcoin in self-custody, in a hardware wallet you control, you have more options, but not immunity. The government will still send you a letter based on your exchange purchase history. They know you bought Bitcoin. They know approximately how much. If you claim you lost it, they may demand proof. If you refuse to comply, you risk prosecution. But proving you still have Bitcoin in a wallet they can't access is difficult. This is where non-compliance becomes possible, but risky. The choice will be comply and lose 40% to 60% of your Bitcoin value immediately, or refuse and risk 10 years in federal prison. Most people will comply, some will not. Those who don't, who successfully hide their Bitcoin through self-custody, will watch it appreciate 5x to 10x as the government revalues it. But they'll be outside the law. They'll be unable to sell on regulated exchanges. They'll hold a massively valuable asset they can't legally spend. Here's what you need to do right now. First, move your Bitcoin to self-custody immediately. Get it off exchanges. If it's on Coinbase, withdraw it to a hardware wallet you control. Trezor, Ledger, Coldcard? Not your keys, not your coins. If the government orders exchanges to freeze accounts and transfer Bitcoin to the Treasury, exchange-held Bitcoin will be gone instantly. Self-custody gives you options. Second, minimize your KYC exposure. Every Bitcoin you buy on a US exchange creates a record. They know you have it. For future acquisitions, consider peer-to-peer platforms where you buy from individuals without exchange involvement. Consider Bitcoin ATMs that don't require ID for small amounts. The goal is to acquire Bitcoin that isn't in government databases. Third, consider geographic diversification. If you hold significant Bitcoin, consider storing it internationally. Hardware wallet in a safe deposit box in Switzerland or Singapore, jurisdictions that won't comply with US confiscation orders. If your Bitcoin isn't physically in the US and isn't held by a US entity, enforcement becomes nearly impossible. Fourth, have a compliance strategy before the order comes. Decide now what you'll do when stage 3 begins. Will you comply and accept the loss? Will you claim you lost your Bitcoin in a boating accident? Will you hold through non-compliance and risk prosecution? Make this decision now, not in panic when the letter arrives. Know your risk tolerance. Fifth, diversify into other hard assets. Don't put everything in Bitcoin. The government may confiscate Bitcoin specifically, but they can't confiscate gold the same way in 2025 that they did in 1933. Too many people hold gold internationally. Too much gold is privately vaulted outside the banking system. Diversify into physical gold, real estate, other assets the government can't easily seize. The 4-stage pattern is absolute. It worked in 1933 with gold. It's working now with Bitcoin. Legal framework established, quiet accumulation active, mandatory sale coming, revaluation after confiscation. The United States government is executing the largest wealth transfer in history, and they're using Bitcoin to erase $37 trillion in debt. Stage 1 is complete. Trump's executive order created the legal authority on January 23, 2025. Stage 2 is active. The government is accumulating 1 million Bitcoin through seizures, fines, and silent purchases. Stage 3 is coming between late 2025 and mid-2027, when a crisis triggers mandatory sale at below market prices. And Stage 4 follows immediately. Bitcoin revalued to $1 million, government creates $1 trillion in assets, debt erased through dollar devaluation. The parallel to 1933 is exact. The executive order language is nearly identical. The legal framework is the same. The mechanism is identical. The outcome will be identical. Those who comply will lose 40% to 60% of their Bitcoin value immediately, and another 70% to 90% of their purchasing power through inflation. Those who don't comply will either be prosecuted or become wealthy by holding through the revaluation outside the legal system. 4 stages, 1 playbook, 92 years between execution, gold in 1933, Bitcoin in 2025. Same pattern, same outcome. The government wins. You lose, unless you see it coming and position accordingly. If this showed you a pattern you didn't recognize, if you understand now that Trump's Bitcoin executive order isn't pro-crypto, but the setup for the largest confiscation in history, subscribe. Because over the next 18 to 24 months, I'll track every signal that stage 3 is approaching. Every new Bitcoin seizure, every regulatory settlement paid in Bitcoin, every sign that the accumulation target is approaching, every crisis that could trigger mandatory sale. This is not financial advice. This is pattern recognition. The pattern from 1933 is repeating in 2025. Executive Order 6102 confiscated gold. Trump's executive order will confiscate Bitcoin. Legal framework complete. Accumulation active. Confiscation coming. Revaluation after. The $37 trillion debt will be erased using your Bitcoin. Position yourself accordingly. 4 stages. The playbook is clear. Stage 3 is coming. You have 18 to 30 months. The choice is yours.